Hi YouTube, how are you doing? And welcome back to yet another video. So today has been yet another crazy one. I actually wasn't even planning on making a video today. I'm doing this off the cuff here because I mean there's just been so much stuff happening. Um but let's kind of break everything down. There's kind of one big thing that I really did want to talk about, and we'll get to that here in a second. But I kind of just want to go over I want to paint the picture of what we've been seeing over the past, really starting Thursday, going into Friday, and then starting today too. So, as probably everyone is aware, the stock market and everything else is just absolutely getting crushed right now. As you can tell from my beautiful thumbnail, that's just it's not nothing is never going to be that bad, but it's just something I thought was really funny that that I was able to find. But um, yeah, I mean, this is some pretty interesting stuff. These things don't happen that often, but it is showing that it is very possible that we are going to be. Well, I believe we've personally been in a silent recession over the past couple years, but now that we're really pretty much going to be in a official recession here, let's just break it down real quick. So as you can see here, the Dow has dropped according to this headline 900 points. It's actually over that right now at almost 1100. So it's dropping. There it goes. You saw the update. It's actually dropping faster than what the headlines are being able to produce here. S&P down almost 3.5. Nasdaq just about 4.25. Yeah. So I mean, everything is just tanking right now. And then the fear and greed index, which you guys know, I mean, right now this thing is just going to extreme fear. I think it's been this way for I think it was just hitting the extreme fear today, but it's been sitting around the fear over the end of last week. The volatility index, if you guys can look at this one, this is pretty interesting. Look at that spike here. Let me actually break this down to like a 5-day chart here. Well, actually, it's not as ridiculous, but if we just bring it to like a 3-month or even a six month, I mean that is a huge jump up right there in the volatility index. And the last time we saw this, the last time we ever saw it at this height was right around, let's say, what, April of 2020, which we all know what happened during that time. So it has it's jumped up a little here and there, but I mean, dude, that is just a huge spike. And if we let me look at the big picture here again, guys. I'm doing this video just off rip, so I don't have anything planned for the most part. I just put together a couple links that I'm gonna talk about, but I mean, yeah, I mean, if you guys look, look at these huge spikes. 2011, 2008, 98, 2002. I mean, these big spikes. These are when the market did a pretty big crash. Now, 2011, I don't remember 2011 to be honest with you, but I mean, everyone remembers the GFC. So I mean, these huge spike. That's a huge spike from 12 to 42 in just like a month or so. Pretty big jump. So I mean, the volatility index, everything. I mean, everyone's afraid. Everything's just going all over the place right now, and obviously, what this channel is going to be mainly about is gold and silver, of course, the precious metals, the things that I believe personally, because I'll give you my insight on things. I personally believe that gold and silver is the way to go. Now, I'm not completely invested in it. I do have money in stocks and things like that, so I am feeling the hit from all of the stuff that's happening, but I do believe wholeheartedly, I don't know when, but I do believe that the US dollar is doomed, just with everything that's been, with all the, with everything that they're doing to it. I personally believe it's done for. When that's going to happen, I have no idea, but I'm insuring myself against it. So that's why I want this channel to be directed towards that. It's more of a education thing, if anything. But I mean, the silver down 5% today. it was actually in the pre-markets, it was actually down even more. I think it was I remember when I looked at it at around 7 this morning, it was like at 20, almost $25, I think, or something crazy like that. Like, it was really low. But 5% drop in silver today. Gold, while not as volatile as silver, is down 2% almost. Platinum, almost 4%. Palladium, almost 3%. And the gold silver ratio is shooting back up in favor of silver. I mean, it's at 88. I mean, I think these are just telling me silver is just becoming a stronger buy at this point. So, but the one thing that I wanted to break down into this video mainly is there's a lot of evidence that you can look at almost in a predictive form that'll tell you when stuff like this is going to happen. With this extreme fear, the volatility, all this stuff, there's kind of there is a pattern, and I'm gonna break it down here. There's actually two different charts I want to show you guys that influence it. The first right here is the 2-year to 10-year spread. Actually, this morning it actually almost uninverted today. It was by 0.01. It was almost uninverted. Let me look over the last 5 years. So, with almost 100% accuracy, anytime that this 2-year and 10-year curve inverts, almost always there's going to be a recession that follows, and I can prove it. So it's kind of covered up right here, but right where that red bar is, where it says 0.09, that's the flat line. So the 2-year and the 10-year spread right now, the 2-year has a higher rate than the 10-year, and usually it's supposed to be the other way around. Usually for something that's healthy, the 2-year is supposed to be less than the 10-year. And over here, if we go back to 2021, it was like that. So, but if we go to about, I think it was July 3rd, around the 3rd or 4th of July of 2022, the yield curve uninverted. When you hear the yield curve, that's what they're talking about. That's what this is. The yield curve inverted in 2022. It has stayed inverted for 2 years. And that's quite a long time to stay inverted. I think I'm going to look at another chart here, but I think usually it only stays for about a couple months or so, and then it comes back. But 2 years is crazy. And this morning, it got to 0.01. I wonder if I can find that, if it'll show it today. Actually, in fact, it actually uninverted today at around 8:40 this morning. It actually uninverted for the first time in 2 years. And typically when it uninverts like that and it crosses over that zero, that flat line that I was mentioning, a recession hits. And I want to I think is it this one? Yeah, this is the chart right here. So the 10-year, the 2-year rate, that's this chart, just kind of on a different picture here. These gray lines are recessions. If we look at around, I mean, right here, the 80s was a very volatile period. But you can see every time it uninverted, recession. Every time it inverted, there was a recession. It uninverted and then reinverted again, recession. And then it stayed over the line and nothing happening. And then as soon as it took a tiny dip in the late 80s, it actually did a little head fake and came back down again, which is actually what it did today. It did a little slight head fake. But as soon as it came back up, recession. So you can see the pattern here. Every time it dips, almost every single time it dips, there's a recession. It happened in the 2000s. It happened again in the 07, 08 GFC. It happened very, very slightly in 2019, going into the 2020 era. I don't know if I think personally this was not due to this. I think this was due to obviously the what happened during that year. But you can see right now it is uninverted. I mean, I have not seen that much of an inversion since the 80s, and that's a very volatile period. So I mean, I don't know if we're going to go into something that ridiculous, but for it to be uninverted for 2 years and then actually inverted today, I didn't think it actually inverted. I saw it when it was at like 0.01. It was like 1 point away from it. So, man, I mean, it correlates. I mean, that's why you're seeing this stuff. That's why we're seeing this. And one other thing I want to point out is the Fed funds rate. There's a little pattern with this as well. I'm starting in the 2000s. We can go back further as that, but it's a little more steady with the 2000s because around this time is when the quantitative easing really kind of started. But if you look, this is the Fed rate. So we all heard about, for example, Jerome Powell is holding rates flat. They're dropping rates. They're cutting, all that stuff. That's what this chart is indicating. And if you look back in the 2000s, there's a pattern. It rises up, it holds steady, and then the Fed drops the rates, and then recession. These gray lines are recessions. So it dropped. I mean, so think of it this way. Well, let me just keep showing the pattern. It drops, it rises, it holds steady, it drops, recession, holds, they raise them up, holds a little steady, drops. I tend to want to ignore 2020 because doesn't have the same economic factors. I don't know, but it does have a similar pattern. But again, let's take a look at what's happening right now. It's been rising, and it's holding flat. We're currently at flat. And what are they talking about doing next possible month? If we look at what people are expecting for the Fed rates, they're expecting an overwhelmingly rate cut. I mean, 97.5. I mean, they're not even predicting it to hold. It's 2.5% to drop it down by maybe I guess 5.25. I mean, maybe there's a small chance that it goes down 25 basis points. But everyone's assuming it's going to be, what is that, like 100 basis point? I'm not sure on the math. I forget. I don't know how they calculate those numbers. But, I mean, this is what we're predicting it to be. They're expecting a rate drop. And if you go back to this chart, what happens when the rates drop? Recession. Every single time. I mean, and look how fast it happens, too. In December of 2020, let's call it November, December 2020, they start dropping rates. They were at about 6.5%. They dropped them down in a year, 4% in 1 year. In 2007 is about where we were at right now, 5.25. In July of 2007, they dropped them down to 2.28. Almost 3% in, what is that? I think if my math is right, that's about what? Let's just say 8-9 months, something like that. I don't know off the top of my head what that is. In a year, they drop it down ridiculously. I mean, it drops so fast. I mean, they did that same thing here, but again, I think it's for different reasons. But I mean, they're going to drop the rates, and when they do that, I mean, the whole thing that the Fed was talking about is we're going to fight inflation. We're going to fight inflation. I mean, that's what they did here. They said they were trying to fight it, and then they said that they won the fight against inflation. But I mean, they're going to go right back to it. Inflation's just going to go crazy again. And again, this is why I'm making the basis case that gold and silver is the way to go. So again, this was just an off the cuff riff, guys. I didn't have anything planned. That's just how I've always viewed things. I hope that makes sense to you guys. I hope it's an eye opener because these things they don't lie. The numbers can't lie with it. So I mean, I personally believe that all this is going to be beneficial for gold and silver. Again, I'm not completely 100% invested into it. I do have money in the stock market too, but I'm looking long term here. So, but let me know what you guys think. That's all for today's video. Again, this was just off the top of my head. So let me know what you guys think in the comments down below. I'm still waiting on that box of silver to come in from the, if you remember from the previous video that we did an unboxing on. That's going to be coming here hopefully this week. And then I have another thing that I'm trying to do maybe this week as well. So just keep in touch here. But that's all for today. Bye bye, guys.